Hey everybody, welcome back to the show. So, received an email from a viewer that wants to know where they should park their cash. They wrote in, they said they've got about $25,000. They're going to need it in 9 to 12 months. Where should they put it? They mentioned high interest savings accounts, money market accounts, bonds, CDs. Even they wanted to know, should we go after bank deposit bonuses? And so I thought I would walk through some of the options available today and their current yields and kind of what I'm doing for whatever that's worth. Not necessarily mean it's best for you, but I can tell you where we're parking our cash. So let's dive in. And again, I'll link to everything below the video that I show you. I want to start with what I think is a very good option for a lot of people. And we use this. We don't use the particular one I'm going to show you, but these are money market funds. Now, remember, there's a difference between money market account and a money market fund. A money market account is at a bank. If the bank's a member of FDIC, it's going to be FDIC insured, and it functions for the most part like a savings account. A money market fund is you could think of it as a mutual fund offered by a broker. It's not FDIC insured, but it is incredibly safe. Depending on which ones you get, and I'll show you several in a minute. They can invest in U.S. Treasury bonds, other federal government short-term paper, they call it, bonds, corporate short-term paper. Oh, that's just fancy talk for loans that are due very quickly. These are not long-term debt instruments, and so they tend to be very, very safe. So let me show you what I'm talking about. I think some of the best money market funds available are offered by Vanguard. Now, I don't actually invest in them at the moment because I left Vanguard because I was unhappy with some of their services, but they do offer excellent money market funds. And you can see in the middle here, you can actually, and again, I'll link to this page for you, but you can select different options. And one that really stands out to me is VUSXX. It's the Vanguard Treasury Money Market Fund. Now, because this invests in treasuries, it should not be subject to state income tax. However, you need to look at the fund prospectus because it may be the case that not 100% of it is invested in U.S. treasuries. You need to check that out. But its current yield is 4.32, which I think is really, really good. Now, it's not the only option. Federal money market could invest in things beyond treasuries. It's at 4.27. And another option that you might be interested in is their Vanguard Municipal Money Market Fund. So this is invest in municipal debt, and so it's not going to be subject to federal income tax. And because of that, it's got a much lower yield. So there you need to figure out your tax situation and figure out your after-tax yield to know which option is best for you. Of course, other brokers, Fidelity, Schwab, I was looking at Schwab here, and I'll link to this as well. They all offer different money market funds as well. In fact, this one offers 4.34%. It's not a treasury fund. So again, you need to always consider taxes. Of course, you may live in a state where you won't have to pay any income tax, or you might live in a state where you'll pay a lot of income tax. And so you need to think through that. Of course, Fidelity offers money market funds as well, so you could consider Fidelity. I own some Fidelity money market funds. But what I'm seeing generally in the market is yields of 4% or higher. Again, I think Vanguard's is probably the best, but you'll often, if you're like me, you sort of make the decision not just on the yield, but where you have your accounts now. You might not want to go set up a separate account at Vanguard just to get access to their money market funds. But then again, maybe you do. All right, money market funds. The other thing I'll mention is, and we're going to look at T-bills in a second, short-term U.S. bonds, and they're a good option as well, but they can be more difficult to deal with because you generally buy them in increments of $1,000, and if you have exactly $1,000, a T-bill won't cost that. It'll cost something less, and when it matures, you get the $1,000 face value back, the difference being effectively the interest you've earned. So whenever I buy T-bills, there's always money left over in the account. And it's like, well, now what do I do with it? So you know what I do with it? I stick it in a money market fund to earn the highest yield. So T-bills can be a bit of a hassle, but they're a great option. And in fact, if we go here to the treasury.gov website, I know you're looking at a lot of numbers, but basically the most recent yields are down here at the bottom. And we go up to 1 year is here. So all in the fours, right? And so T-bills, a great option if that's what you prefer. Again, it can be a little bit more of a hassle to buy them, but I've done it many times, and I guess it's not that difficult. So that is another option. And if you're needing your money this year, you can set the maturity accordingly. So, for example, the viewer that wrote in needs their money in 9 to 12 months. They could go 52 week, but maybe they cut it back and do 26. Keep in mind, you can always sell these before they mature. And because they're short-term bonds, any fluctuations in interest rates and yields shouldn't change the value that significantly. Now, another viewer wrote in and asked about a Nerdwallet account that's paying 4.37%. Now, Nerdwallet is, a personal finance affiliate marketing site that markets credit cards and savings accounts. Their founder, I actually knew him, or we exchanged emails back in, 2009 when I was running Dough Roller. Of course, now it's a publicly traded company. It's done very well. And they've come out with this account, and it invests in T-bills. And so the idea behind this account is, hey, the hassle that Rob just described, buying T-bills? Well, if you open this account, it kind of works like a money market fund. You can put in as much or little as you want. You don't have to invest in $1,000 increments, and you could withdraw money, and you earn a good yield. Having said that, I see some issues with this that you need to be mindful of. First of all, you don't actually earn 437 as I read the fine print. You see this little asterisk right here? Whoops. Well, if you go down and look down here, it says Treasury bills maturing in 1 month as of 1/17 are actually paying 428, and that the rate shown, I assume this rate, is gross of fees, not net of fees. And I did not dig into the details to find what the fees are. And so, you're going to want to figure that out before you decide to go down this route. The other thing is, to qualify, you've got to upgrade to Nerdwallet Plus. It's $49 a year, but to me, this is all just a big hassle. I just wouldn't do that, and I wouldn't want to open up an account. I'd rather just have it at a broker, or if you wanted to open up a CD with a bank, for example, or use an online savings account, I would personally just prefer to open up directly with an FDIC-insured bank or a broker. But I will link to this below the video because a viewer asked about it, and you can check it out for yourself. The other thing I'll mention is, because the viewer asked about it, he asked, what about bank bonuses? Well, again, to get the bonuses, and they're out there, you can get some bonuses as much as $1,500. And to get that bonus over a 9 or 12-month period with $25,000 is not a bad deal. So you might want to go down that route. But as you might expect, there are all kinds of hoops you have to jump through. I do have a page that lists all of the current bonuses that we're aware of, at least from the major banks. I will link to it below this video. If you happen to go to that page and you are aware of bonuses that I haven't included, please leave a link below this video and let us know, and I'd be happy to add them. We do our best, but as you know, bonuses change all the time, and there's thousands of banks. So certainly if you know of bonuses that we've missed, please let me know. In terms of savings accounts, and I can show you this on my site, the current rate, depending on exactly what savings account you're going to get, is you can get up to 5%, but usually you're limited to the amount you can save. Without limits, I'm looking at it now, I won't bother showing it to you, but it's about 4.75%. I'll link to that below the video as well. So those are a lot of options. Again, my personal preference at the moment, just for a combination of good yields and convenience, are money market funds. And that's where pretty much all of our cash is at the moment. Before that, it was in T-bills. Again, another good option. I just got tired of hassling with buying them, having money left over that I've got to stick in a money market fund anyway, and then they mature, and I got to stay on top of it to reinvest them. That was my take. So we've gone with money market funds, and we think, I think the yields are good, and it's just a lot more convenient. So there you go. That's my take on some good options for your cash. Of course, if you know of others, leave them in the comments below. And if you have any questions, let me know as well. I'll be happy to help you out any way I can. And until next time, remember, the best thing money can buy is financial freedom.